Hello, traders. It's 8 a.m. Chicago time on Tuesday, the 23rd of February, 2021. This is episode number 1943. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. I can see you miming these words since you've heard them, some of you, 1,943 times. Thanks for joining me again today, Tuesday. Pretty interesting movement. It's like Monday move, the plan for Monday executed Tuesday while I was sleeping type of thing. Let's dive right into the convergent trading pre-market summary sheet, where we see again risk-off sentiment pretty strong today. Seeing the Nasdaq again leading the pack down. Nasdaq's down 206. Oh, now 210 points from settlement, or 1.59%, has tempered a little bit since the sheet was done. The Russell again second place. On the losing side, down 29.4 points, or 1.31%. The DAX is off 1.1%. The Euro stocks are off 0.68%. The S&P is opening in a gap down. It is down 20 points, or 0.54%. Silver's off, but silver is only 5 lousy cents away from $30. And relatively strong, but gold is unchanged on the session. The 10 years are unchanged. The only thing I see that is up is the US dollar. Crude has come off as well. Crude is down 21 cents, or 0.3%. And so that's how things are rolling. Just money's coming off the table, being pulled off the table. We see the dollar rising as a result, up 17.5 cents today, trading at $90.17.5. So that's where that stands. In terms of what came out overnight, there were several releases. Case Shiller just came through, but the overall picture is that the numbers are pretty good. What we need to pay attention to today is the Fed testimony, the Fed chair testimony to lawmakers. We do have consumer confidence also at the same time at 10 o'clock Eastern, and API crude oil change at 4:30. So far, the market has traded, the S&P has traded 390,000 contracts, which is on the high side. Really strong volume overnight, 390,000 in a multi-distribution profile, really a trend down profile, and 56 points of range, which again is more than 1 sigma. 1 sigma is 52.5 over the last year, which includes all of the pandemic range and all that. So 1 sigma of range, what's considered normal, anything 52.5 points or below. The most common being the mode, which is 31.25 points. Statistically speaking, this is an outstanding range. It's in the second sigma value area range. So that's where that stands. So we know coming in that we are pretty aggressive on the sell side. We know that volume's there, so we know that we're likely to carry that activity into the session. The current read on the overnight inventory is 48% short. The market made a little trip up before it dropped below, and so that's where we stand. Okay, let's move on and look at what was expected yesterday versus what we got. Here are the three plans from yesterday. The primary plan was expected to be a small push higher, did not expect it above 88. This number I put up here, did not expect it above 88. I expected if it's going to come back, scenario one is still in play at up till 88. Again, that's what it says here. That's how I write my eights. I don't do I think most people do this. I do this. So if that looks like an odd thing, that's what it is. But 88, any push above 88, looking to sell that, looking for a drop into the through the 62 overnight low, 61 and a quarter overnight low for the overnight stat, and then looking for a bounce back up into the 62 area, and then I was looking for it to drop to 45. 45 being a key number and 30 being a really important number. I X'd them out right here. That's the primary scenario. The secondary scenario, open auction, it dips down and ends up pushing up and holding somewhere in the middle of the range. Expected it to finish somewhere in the 38.80 area. Scenario 3 is a small push down that is responsive, gets through the 88 and gets back into the range and pushes to double O, pushes to 98 half and double O. That's 3,900 before it falls. Guess which one worked out yesterday? All of them. Yesterday was very interesting in that we got the open auction, we got the response to 88, we got the acceleration down that was expected for scenario 1, the consolidation, but then we didn't get any continuation lower. So we did not take out the 70 IB low, did not take out the overnight low of 61 and a quarter. Yesterday we finished with the overnight stat unbreached, and that squarely falls in the 2% historical probability range. Then we consolidated per scenario 2, and then we pushed to 3,900 per scenario 3. So here's scenario 1, push up to 88, and then impulse down. The largest impulse of the day is down, okay? And then, so that's scenario 1. Scenario 2 is all of this right here, scenario 2, and there's scenario 3 right there, a push to 3,900 and come off. Really tough read, I felt, in the sense that I expected the market to be out of balance, and it's either going to pull back or in a responsive manner or continue, and it just kind of looked like it was going to do both. And so this to me just felt, you know what? It felt like a Monday, and it was a Monday. And like I said, Monday is the least volatile day of the week. Traditionally has one of the weakest ranges of the day, the lowest rotations. And last night, as I came back to do my homework and post it in the Convergent Trading Headroom, I said I posted that the ES left us with an inverted hammer today. The test of 3,900 shows clear rejection, so I want to show you that. Very important because it sets us up for today. Again, the ES left us with an inverted hammer. That's an inverted hammer right there. A hammer generally looks like this in candlestick land. Might have a wick on both sides. That's what's called a hammer. An inverted hammer is exactly what we got yesterday. And it said the test of 3,900 right here shows clear rejection with the market closing below the lows of the last 2 weeks. We ended up closing below these lows right here. If buyers don't step in on Tuesday, we're likely to see 38.30, and then the 2-2 gap, which is way down here. The 2-2 gap is in the 3,800s, below the 3,800s, and so it's that's what it's shaping up to be, which is what was expected yesterday, right? We expected 38.45 test, and then ultimately 38.30. And so this sets us up. This really is a clear indication. If anything was accomplished yesterday, it showed that the market is not liking the prices above the 3,900 anymore, and so we are likely to discover prices lower. Remember, when the market wants to entice buyers, it sends prices lower. As prices get advertised lower, more and more buyers step in, and if enough participants or volume comes in on the buy side, that pretty much stops it and then starts it rotating the other way. Big target, big, big target up above at 39.09. Okay. And had it broken 3,900 yesterday, we would be looking for 39.09 today if it had closed inside of the range. That would be the next big target. If not, then we are looking at the 38.30 down below. Okay, so that's the big picture. The delta keeps migrating down, albeit slowly, but the delta continues to migrate down. And then again, in continuation of our review segment, here's what's happened. Remember, this is yesterday's RTH or pit session, and then this is the extended. And look at what happened here. It pushed back to 38.96, another attempt at the 3,900, lower high. And then right after the European Open, sellers come right in and push it right through the prior day's low at 38.70, and then we've made our way down into the 45 here. We've pushed the 45 down to 40 in the overnight session on the low, and then right behind it we have the 38.30. This is exactly scenario one, except the turn was expected to be in the 38.88 area right there. So scenario one yesterday, for recall, is a push higher, then an impulse down, which is what this is. An impulse down for a trip down to 38.45. So we're seeing scenario one pushing down into the expected area. If we do not find buyers stepping in this 38.30 area, then we are likely to squeeze through to 3,800, 37.95, 37.75, and so on and so forth. Those stock zones become key targets below. Note that last week's close was 38.98.50. Last week's low is the 38.80.50, and we are below it. And this is what I believe is driving things down. We have to be careful today with Fed Chair Powell's testimony, but overall, the market has spoken. These drops, these big impulses, are something that is new. Over the last 2 weeks or so, we're seeing these big impulses down, which is nice to see because it kind of puts that slow, low volatility grind on pause and gives us something, gives the market something to participate in, and the flow of money starts coming in and out of the market as opposed to stagnating, the buy and hold kind of mentality. So that's where that stands. Interesting to note, I was looking at Tesla because it is off again today. It's off 8.55%. It was down about 6% from the open yesterday. It is just, everybody's writing about it, is getting hammered. But you look at this stock and you look at the volume profile on the stock, and it's like pump the brakes a little bit on the big talk about Tesla failing. Somebody out of Wedbush Securities wrote that its stock is now tied with its investment in cryptocurrency, and so it's coming off with Bitcoin. I find that kind of ridiculous, but who knows? They're the experts, right? But overall, Since it broke out of the 45, let's go log scale here. Since it broke out of the 45 area down here 45 to actually it's more 60, I guess. Since it broke out of here, which is where the point of control is for Tesla, that's the balance point, it really has been in an uptrending, very thin structure, um, very thin structure below. So I don't want to dwell on this on equities. I don't trade equities regularly, so I don't consider myself an expert in these much anymore. It's what I started my career as. But to me, it looks very much like it got well ahead of itself, which we know it did because as it got listed in the S&P, it really started to take off, and now it's making a comeback. It's pulling back a little bit, which is expected. How is this related to what we're doing? It is definitely impacting how things trade in the Nasdaq and so on. And so, to me, it looks like it's coming into the next high volume node here, with a price point in this $640 range. It's coming into some support, in my opinion. But a lot of selling that has been going on in the NQ, which has been really aggressive on the sell side, is being attributed. Now, I don't know if it is or isn't, because I'm not monitoring stocks actively, but you look at the NQ and it's so weak. Like yesterday, when the S&P was pushing 3,900, this is what the NQ did. It just could not get past mid. Really decent trade there, and then it sold off strong. While the S&P did one of these, that's the shape of what the S&P did yesterday. The Nasdaq simply opened, pushed up, sold off, came back, came back, and then sold off into the close. And it's being attributed. A lot of it's being attributed to Tesla and the sympathizers with that, and that's where we stand. It's just something to keep track of. This is why I have this chart right here. This chart right here, which is the Fangman T stocks. It's an index that I've created of these Fangman plus Tesla stocks, and you can see Tesla was down 6 point something percent from the opening print yesterday. It had sold off a little bit before the open. So that's where that stands. I'm seeing a lot of weakness there. Let's take a look at what's expected for today. If my chart would just open up. Yes. Okay, so here's how things look like for today, in my opinion. We've accomplished quite a bit of what was expected on scenario one yesterday. Inventory is not too deep sold, so it's only about 50% short. We have a clear delineation right here in the 62, the prior all-time high, the low of yesterday, right there, right here, right? To me, it looks like it's most likely going to be responsive. We do have a gap we do have a gap down, so gap rules apply. We're looking for responsive buying. I'm looking for it to fail in this 38.58 single print from a while ago, from the beginning of the month, into the 61.62, consolidate, come back. I'm looking for it to push this 38.40 and start working its way into this 38.30 area. And this is a good basing area. It might push through by a little bit, but this is the MC point of control. Good basing area before it finishes back up in the 45. So what numbers am I looking for here? On the upside, I'm looking for 61 above, 45 below. 30 being the double, the really important price, call it a triple, and then I expect it to bounce back up and balance out in this 45 region here. That'll make up scenario one. So any rallies today, I'm looking for what it'll do in terms of how well it's lifting price and up into 61. If it doesn't breach 61, I'm locked and loaded, looking to get a short on in that area. The 58 to 61 area becomes a really important area, and then I'm looking for it to rotate back down through the overnight stat. Okay, remember the overnight stat was not hit yesterday, which is highly unusual. It is highly, highly, highly unusual that it doesn't get hit 2 days in a row. Secondary opens unable, drops into the 38.40, tags that, pushes through by a little bit to the 34, 38, 34, consolidates, finds its footing, has an impulse up, comes back to the overnight point of control, which is at 38.55, and holds steady and starts to migrate up to 60, 61, 62 before it settles in. This is a test down with a responsive push higher. The intent here is to fill the gap zone and to bring us back in line, but to still remain imbalanced below. At the end of the day, we're still looking for a lower high and a lower low, which we're likely to get here. We're opening really a lot lower, but the key prices to pay attention to is 61.62. We're not likely to get into the 80. The 80s becomes the next big price up, but 61, 62, 45, and then the 30 become big. And then below there, the 50% of the swing is at 15, and then we get to the double O and start pushing the gap zone. This is the gap zone from the beginning of February, and that becomes the next big area down. So if we get some really good ranges, fantastic. Range and volatility is opportunity, but it's also a chance to lose money. So wait for your setups. This is likely to be a target-rich environment. So wait for your setups and execute your plan. Good luck, and hopefully you gain something by being here today and every day. Cheers, and thanks for being a part of this Trader Bite community. Take care.